Hey everybody, welcome back to the Rob Review. I'm your friend of success, Robert Morris. Today I'm talking about trading a $50 stock versus a $350 stock. Anything below 50, anything above 350, it's just a range. But you and I both know that if you're an active stock trader, stuff that a lot of people trade nowadays, it's hard to find a stock that's less than $300 a share. The reality behind why this matters is if you are stuck as a trader and you are grinding it out and you're just not seeing the performance you want to from your money, generally speaking, it comes down to three key things that you're doing that need to be changed or improved upon or tweaked. And the first thing is always going to come down to, what are you trading? And does it move? If you're trading a stock that's less than $50 a share, the options typically don't move enough that you're going to get any movement out of the option, so you're not trading the option. So you're not getting enough leverage out of your money in the first place. Number two, the stock doesn't move because that's where you start. Typically speaking, a $200 a share plus stock doesn't mean it moves. What it means is that stock has the potential to go on my list of tradable stocks. If the stock has a movement of a minimum of $5 a week, then it goes into my further criteria to study up on. I don't trade anything that doesn't move at least $5 a week minimum. And I love for the options to move really well too, because I trade options, not stock. However, I believe you have to do both to have success in the stock market, because on that token, I talk about a lot covered calls and those types of things for income. I don't know about you, but $800 stocks, $300 stocks, I don't have the kind of dough to be buying 200, 300, 400 shares of that stock to then sell covered calls on it. So I look for and currently do covered calls on stocks. The last stock I did a covered call trade on was a $30 stock. So I could buy several hundred shares of it. Not a lot of people think of it that way. You got to differentiate. So the difference, what's the versus about? The versus is, if you trade something looking to really exponentially grow your money and the stock doesn't move, it's not going to help you. If the stock is below $350 a share, it might not move at all. Worth trading in options, but it might be worth putting in a separate list of stocks that you want to do covered calls on. That's a whole nother thing, a whole nother ball game. The objective is twofold: to grow your money with options in one account, to grow your money with income in another account, stock purchase in one account, options purchase in another. And those options, they got to move, man. Move. I'm talking stuff that I love to trade has $6, $7 a day average movement in the stock. Think about what the option does. Let's just take XSP, for example, the last trade I did. That stock index moved from 681 to 685. The same option moved from a $2 purchase to a $6 bid. And I was able to sell for a huge profit. You can't get that if you buy a $50 stock and it goes to 53 and you're not going to get that kind of return. 100% return doesn't come from that. Same thing with the $50 stock. If the option is $1 and it moves 25 cents, you might have not even made up the spread. And nobody might have ever told you that. And that's the purpose of this video. I want to help you see that the first step to stock market success is to realize what you're trying to do with the particular vehicle or asset that you're trading. First, I want to see, does the stock move? Then I want to see, does the options move? You can do that by literally going in and saying, okay, I'm looking at a chart. I see the option. I see the stock move from 100 to 150 from October the 6th to October the 12th. Okay, Now I'm going to go in and look at the options montage. If it moved from 100 and I think I said 100 to 150, well, let's look at the $110 calls. How did they move during that time frame? You can study the options chains on those particular option spreads on that stock, and you can see if the options price well enough for you to want to trade it. That's where the research comes in. And once you knock out the research, bada bing, bada boom, you got a list, man. And you're knocking out the list, looking for the stocks that, one, trade most optimum movement. Number two, price options well. Number three, price options well enough for your money and what you're risking in the trade. And number four, move not just once every now and then, but move a consistent amount of money and a consistent amount of movement. I would say at least minimum once a month. There's some stocks that move best around earnings. So you might have a stock that doesn't move once a month, but it makes a big move every 2 months. You determine if that's a big enough move for you and your money. My thought process here is, for my trading account, I try to grow the account balance by 25% a month. So if that's my objective, it helps me eliminate a lot of fluff from a list of, let's say, 400 stocks down to 10 or 15 that I am going to focus on. And now I'm going to go and do deep-seated research on those stocks. How do they move in different zones? How do they move going into earnings, out of earnings? Where's the window? Is it 3 weeks before, 3 weeks after? Those kinds of things. And that will teach you and show you the difference between trading a $50 stock versus a $350 stock. Remember, I'm your friend in success. I'll see you next time. Look, I like to leave people with a quote, and this is a quote my wife gave me. An ounce of doubt can change everything. You are the maker of your own success, and you can achieve it in the stock market. The number one thing to do, and I know this is cliche, but it's true, just don't give up. When you get knocked down, learn, get back up, get right back in there.
The views and opinions expressed in this program or any other Rob Review program are not to be considered financial advice, and all these strategies have their own inherent risk. If you act on information given in this show, you are doing so at your own financial risk. Map.Productions does not take part in your positive or negative financial results. That is why I recommend you consult your financial advisor before acting on any of these tips. What worked for Robbie may not work for you exactly as shown in the show.